Here's the twist.
Please welcome to the stage Axios Chief Economic Correspondent, Neil Irwin.
Good morning. Welcome to Axios Smart Money, Building Financial Confidence in the Digital Age. I'm Neil Irwin. Technology, especially AI, is rapidly reshaping how people manage money, how we pay, save, invest, and make financial decisions. The upside is real: more access, better tools, new pathways to build wealth. At the same time, this moment raises important questions about trust, education, and who gets left behind if access doesn't keep up with innovation. That's what today is about, bringing together leaders across policy, business, and finance to look at how we expand financial confidence in this digital-first economy we're living in. Before we get started, a quick note: if you're not already, you can subscribe to Axios newsletters to stay on top of the trends shaping the economy and your future. Let's get into it.
Up next, our view from the top moderator, Axios publisher, Nicholas Johnston.
Good morning, everyone. I'm Nicholas Johnston, the publisher of Axios. Thank you so much for waking up early on a beautiful, little chilly spring day and joining us for this important conversation. We're grateful that all of you are here. Also hugely grateful to all of our partners at Axios. Nothing we do here is possible without the support of our partners, the investments in journalism we make around the country, convening great conversations like this. So I'm really excited to thank FICO for making today's conversation possible, and welcome to the stage from FICO, their head of corporate impact and engagement, Rukia Kelly. Rukia, welcome to the Axios stage. Good morning.
Good morning.
Thanks for being here.
Thank you.
Let's start big picture. I think FICO is one of those companies where everyone kind of knows what it is and they know they have a FICO score, but maybe don't really realize why it matters and how they can change it. So maybe start with telling us how do you approach that, educating people, giving them the tools to understand and improve their scores.
So thank you. First, I want to say thank you all so much for having me on this very brisky spring morning. It is truly a privilege to represent FICO and to be in the room with you all today. I will say, I'll start with a quick story. We had just had an event a couple of weeks ago, and we were talking about the importance of the FICO score, the programs and services that we offer. And an attendee came up to me right afterwards, and she was so excited to share. I check my FICO score so often. I check it more than I check my group chat. And if anyone has a group chat, you know it's a lot, right? And so she said, but I also know that if I keep a little bit of a balance on my card, it will help my FICO score. And I paused. And that's where that gap is. That is where we have and where FICO has the opportunity to help fill it.
She was wrong.
She was wrong.
Right.
But there's so much intention. Consumers are motivated. They want to know what their score is. But many of them are still working through how to fully understand it. And as an industry standard for credit scoring at FICO, we have a responsibility to not only continue to build responsible, innovative technology to support the credit system, we're also responsible for providing expanded access and understanding for consumers. And our focus in doing that is through our tools like myfico.com, where consumers can see their scores and see their and use tools and see their credit report, but also through the partnerships that we have with lenders, with nonprofits, with government agencies, and ensuring that we're providing the information that's going to be helpful for that.
How does that translate into the real world. I wonder if you could share like some of the actual strategies you use to balance like financial independence and growing wealth, making money versus saving money. Like, what did you tell that young woman when she was a little off and what she thought she should be doing?
Well, I mean, that's when we have to get into the lessons. It's not just about the awareness of what your score is. It's about understanding how to apply it to the systems.
Yeah.
And so we sat down and we talked about what are the parts that make up your score and what is the importance of having credit, but also managing your credit in a responsible way. So when we talked about her score, we talked about, okay, what are you looking to achieve? What are you looking to do? And if you can pay your bills on time and pay them in full, do that. So that was the part of the takeaway I gave her. But for me, it's not only giving that awareness of the score, but it's helping her to understand what it means to her financial health.
I mean, it seems like seeing that there's more than just that number. She's refreshing that page more than her group chat, but she's just seeing like 3 digits and maybe needed more work to understand what goes into those 3 digits, why do they move.
Right.
How do you navigate all the junk on the internet? I guess is the way to say that, like with fake financial influencers, AI, chatbots. Like, what is your strategy to navigate and combat that and help people understand like what's real and what's not?
Yeah, people are spending so much more time on social media, digital platforms, and while it can be shunned sometimes, we have to, as credible organizations, reach people where they are. If they are on those platforms, how do we get our credible information and trustworthy information to that consumer? I would say trust but verify. People are getting a lot of myths given to them, such as you should carry a balance on your card. That is not true. But if you have access to programs like MyFICO, your financial institution, government websites, FDIC has great information. We have programs through FLEC. There are a number of places where you can get credible information. It's being thoughtful and not just going off the first thing you hear, but making sure it's coming from a
I mean, there's a lot of, I think people see what they see on the internet and just take it at face value. I think it sounds like the educational program says like, no, take that to more trustworthy places. And I feel like the challenge for you is how do you get the word out about those trustworthy places? Like how do you approach competing with viral stars spreading junk about this?
It's working with those who are actually credible on these platforms. One of the ways we've done that at FICO is through some of our sports sponsorships. Right. We know that students are looking at sports stars, they're interested in what those sports stars are doing, and we're able to say, hey, talk about financial health, talk about credit health, and we're able to sponsor them and support them in having the correct information that they can share with those students. So it's still working with those influencers, those people that are online, but it's making sure they are working with credible organizations.
It sounds like the challenge is, or the opportunity is, how do you bring an industry that maybe isn't on TikTok all the time, like into these arenas? Like, do you think a lot about like where are younger people starting their financial journey? Where are they getting information? How do you get on those platforms as well?
Well, what we found is that, and through our recent FICO Credit Score Credit Insights report, that 77% of consumers feel that monitoring their score gives them peace of mind. Right. But 60% of Gen Z are still anxious about their score. So for us, it is making sure that we are marketing in areas that they are. So we are on TikTok, we are on Instagram, we are in their schools as well, their colleges, their high schools, ensuring that the correct information is getting in the forefront.
You talked a little bit about this as far as trustworthy information sites, not just your presence online, but like government presence online. Talk a little bit about like the whole of everything, like the all of the above partnership. Like so many of the conversations that we hear on the Axios stage are about public-private partnerships. Yes. What do you view as the role for other members of the industry, other organizations, or the government?
Yeah, I would say public, private, and community. We are one part of this broader ecosystem, and we understand the importance that we bring around education, access, and innovation, but we know that we can't make a shift in economic mobility unless we're working with those who are on the ground. Right. So we have our public sector policymakers who are extending financial access as well, and then we get to partner with organizations like Operation Hope and Jumpstart to actually bring that information into the communities that need it most. One example of that is a partnership we did with Operation Hope, where we were able to come and bring credit education workshop, and then as soon as it finished, we had credit and financial counselors on hand to work with those who attended right on the spot.
And we'll have Operation Hope up on stage here later today, probably to hear a little more in detail about that. Before we get the hook here, though, I love to end on a little bit of homework. What I love about these events in Washington, D.C. is the folks who wake up early and show up. These are the folks who care.
Yeah.
Right? They're going to go back to their offices. They're going to write the policy. They're going to write the regulations. How can they be a force for good? When they go to the office after this conversation, what should they do?
Yeah, as we think about financial education, it's often about access. How can we get it in front of people? But really, it's time to take it to that next level. How do we ensure they understand how to apply it?
Right.
And so as we think about the financial infrastructure, we can't only think about getting information out there. We need to make sure that we're building in how do we make sure people get it. And look for opportunities to continue to partner with us. We have partnered with Senator Warner's office all across Virginia to bring our financial literacy workshops to communities and schools. So we can work cross-sector. We mentioned Operation Hope. We have partnerships in rural and tribal communities. So it's really about continued collaboration across sectors to ensure that we are truly scaling economic mobility.
So like the real solution here is to understand where these audiences are and go meet them where they are. Probably not necessarily here on Capitol Hill, but more in their communities to tell those kinds.
Well, look, here in DC, there are needs too, right? And those who make the decisions around the policy and protecting consumers are being made here. And so think of FICO as a trusted partner as we have those conversations too.
Great. A little bit of homework for folks in the room. Rakia, thank you so much for being
Thank
here.
you.
Thanks to FICO for making this conversation possible. And we're going to kick things off with my colleague, Ashley Gold.
Please welcome Axios Senior Tech Policy Reporter, Ashley Gold.
Hi, everyone. Good morning. Thank you for being with us. As policymakers grapple with how to expand access and protect consumers in a rapidly evolving financial system, I'm honored to be joined by Congressman Josh Gottheimer of New Jersey, a member of the House Financial Services Committee. Congressman, thank you for being here.
Thanks.
Good to see you.
Way too big.
Great picture, great picture. We love it.
Morning.
Good morning, everyone. And I said he's a member of the Financial Services Committee, but he's also doing a lot of interesting work on just AI in general and taking a leadership role on AI issues in the House among the Democrats. So let's start with a broad question on sort of your philosophy on regulating AI and the sort of centrist position you've taken in making sure that there are proper guardrails, but that you're also allowing for innovation and allowing businesses to thrive. So what is your sort of central principle there?
Well, I think the balance you're talking about is critical, right? It seems so far you've got people who have said, shut it down, put it back in the box, make it go away, which is impossible and not reality, and does not acknowledge the fact that we have to win this race against China. Right, and we are in a Cold War against China. We've got to win and make sure we have the tools to do so. And then there's those who say we shouldn't have any kind of guardrails whatsoever. Just let it rip and run, which is also not the way at all we should be approaching this. I think there's a smart way to do it and have smart AI so that we can win as a country, win as an economy, win for people, because the benefits are incredible if you do it right. But also, of course, there's plenty of pitfalls. So you need to be thinking those through. And part of what I'm doing as co-chair of the AI Commission in the House and the three of us, there's three co-chairs, is to think through, because it's a big space, all the things that we should be approaching from a guardrail perspective, and how do we make sure this grows the right way. And as you know, it's a lot. There's a lot of different impacts it's going to have on people's lives. It's having now, that it will have. There's a whole national security component to this, in addition to affecting consumers and affecting jobs and the economy. So that's the kind of stuff we're thinking through. But we're not taking a, hey, just let's see what happens approach, which, I think the administration so far has been like mostly do what you want to do.
And do you think it's possible during this Congress to come up with a bipartisan AI bill that could pass, the one that the president has called for as part of his AI action plan? Or do you think you're going to have to wait until maybe there's a change in the makeup of the House and the Senate to get something like that done?
Well, I'm always open, as one of the people who founded the Problem Solvers Caucus, I'm always very open to a bipartisan approach, and I'd much rather a bipartisan approach because then it's lasting. So far, what was a little frustrating is we got to this Congress. If you follow this last Congress, there was a bipartisan committee. The Speaker made a decision this Congress to disband the bipartisan committee, kind of hand the keys over to the White House to handle this. And as a result, this became immediately a more partisan exercise, which it shouldn't be, right? This should be something that's bipartisan. And so many of us have been working together in a bipartisan way on many bills, many pieces of legislation. Mike Lawler and I just did something recently on training. We're working on the Financial Services Committee on a piece of legislation now, which I hope will be marked up very soon to sort of lay out some of those guardrails. But from when you're using AI in a financial services space, but the bottom line is this is going to, you've got both sides kind of right now laying out certain positions. And the question is, on a broad scale, can we come together? I think you'll see frameworks laid out on both sides, and then hopefully we'll come together where we can agree in a bigger sense. But right now it's been kind of one-off bipartisan pieces that we're doing.
And since you mentioned AI and financial services, and that's why we're here, how did you sort of come to your ideas where AI can be used for financial services, but there are guardrails? What are those guardrails, and how did you decide?
Well, so here's the exciting possibilities right now for people who, a lot of Americans have no access to financial assistance. And that's a huge issue because it leaves some out and they don't get the right advice or any advice whatsoever. And there's a lot of things to think through. If it's not what you do for a living, and you're busy, you're not thinking through all the different pieces of how you should invest or what you should do early on for your family. And I think AI here can provide a lot of opportunity to think through some of those issues, to say, here's what I make, here's when I hope to retire, here's what do I need, and should I buy a house, should I rent, lots of questions to run through. And I really think AI can be, and so far it's been helpful that way, and I think you'll see a lot of financial advisors using it, but then people who you'll be able to have much more of a democratic, small d, openness to financial advice. The challenge, of course, is you want to make sure that you're not getting just crazy information,
right,
and that there's clear disclosure up front that it's a bot giving you information.
It's not a bank.
It's not a bank. And if the banks are using it, they have to have still have a fiduciary responsibility to make sure they're protecting the consumer, right? That's a very big thing. And people need to know that's transparent, that, by the way, don't just take this and run with it just because the chatbot's telling you to do so, right? Your agent, may be your friend in certain cases, but you don't know what other interests they have in mind. So there's a lot of things that we've got to make sure we're transparent. We've got to be very clear about fiduciary responsibility and obligation. And the courts are working this through right now. You've seen some cases for lawyers on fiduciary responsibility, right, on attorney-client. You're going to see similar cases, my bet, on financial advice. And so part of what we're trying to do is think through some of these issues now. We're also coming up with a sandbox approach, this legislation we talked about, to allow the agencies, the financial regulatory agencies, to be able to see how they can use AI, how they should think about regulating it and doing it so in a safe space.
And can you lay out for us sort of like the main pillars of this bill that you're talking about? Give us a little preview.
Well, it's really, think of it as, if you all know the sandboxing, the idea that you should be able to, we want to create a safe space to be able to innovate. We want to be able to have the agencies be able to do the same thing, have a safe space to be able to work and try different things. And also, I think we want to encourage the sector to be able to try to see if they can how they can use AI in a safe way. But I think because I see these things going together. You need the agencies understanding how to use the tools and being protected in doing so, and you need companies to be able to see if they can use the tools and how are they protected for experimenting on how to use AI to help people. But again, my big concern is making sure that there is a fiduciary responsibility and consumers are protected, and that they're very transparent about what they're doing and people understand the risks associated. Just because just because the platform tells you this is, I think, is your best idea and best way to invest, you don't want people going off and just right away doing those things without getting sound advice. And also, you should know, and this is a bigger piece in a broader sense of something that I'm thinking through from an agent Bill of Rights perspective. Is your agent working for you, or are they working for the company, right? Like, and this is where those sort of things come in. Well, if you knew that if the company, the agent, so say you have financial services company A, and financial services company A has an agent that you're talking to and trying to get advice from, but it turns out that they've got a product they're trying to push, and they get extra vig every time they sell that product. You should know that, right? Those are the kind of things where we need to be very transparent with people when they're getting financial advice, especially, and that's where I want to make sure we have protections in place.
So we're talking about potential disclosure requirements, transparency requirements for these.
Transparency, disclosure, those are the kind of things that we're very focused on. You want on all spaces on AI, you want strong accountability, and in general, we have to really think through, these tools can be phenomenally helpful and great for people, and especially think about all the people who have access to credit right now who maybe won't have access to credit because the companies can use it and do different assessments on you than just the traditional box that they try to put you into, right? Oh, that person sort of looks like this, let's put them over here, but they could do a much more intricate deep dive into your finances and who you are, and hopefully give you much better access to credit for what you've earned.
So you think in that way it could lessen discrimination?
Yes,
in lending?
That's my hope, is to lessen discrimination lending, and you have to make sure that it's not programmed in such a way where it learns bad things and is discriminatory, right? And that's right, and that's part of protecting people that we have to also really focus on.
Are there any areas of financial services or personal finance that you would consider absolutely hands-off to an AI system, that you would not mix the two?
It's a good question. No, I don't really think, I don't really see it as like if there's a certain area where we shouldn't mix the two. I'm more focused on that transparency, that responsibility, and that accountability. And if you can get it better advice, like, to me, it's about making sure more people have access to good advice. Right now, financial advisors can't handle everybody, right? And there's not enough of them.
And people can't afford them.
Right? So if we could change some of that, so people imagine the amount of advice you can get. We've had for years now companies like Wealthfront or others that have robo-investing, right? Which was a big change, because then in theory, more people could have advice and get access to different products. And that's been going for a while now, and you've heard along the way different complaints about robo-advising, but overall you've heard a lot of good feedback because giving more people access. You could think about it this way: if we can give more people access to great advice, and the best advice that the people with the most resources get, and we could bring that to more people, that's a huge win, right? The key is, again, being transparent, knowing there's not some sort of vig the company's getting by selling a certain product that you're not aware of. I always worry about that, right? It's like if you go to a restaurant, sometimes you say, "What's good here?" Or they push a certain thing. You really should have this dessert, and that they're getting an extra buck if they push that dessert. You want to make sure that that's not happening in financial services.
Ooh, I'm gonna think twice next time I ask for dessert.
Sometimes know that.
Yeah.
I worked in the restaurant business.
I never thought about it that way. Wow.
Sometimes they're like, "You should really try this." That's because the chef is pushing that night.
Oh my gosh. Well, that's very enlightening.
I'm not saying that happens all over the place, but I don't know. Some restaurant I worked at, that happened.
Good to know. Good to know. Some restaurant in New Jersey. We're not going to say.
And
which
that's
one.
God's country.
Yes.
By the way, Springsteen played last night. Those of you who were Springsteen.
Did you go?
Who were Springsteen fans? I was there.
Amazing. I wonder how he feels about AI, but that's a whole different conversation. So another thing that you have been active on the Hill is workforce training. So I want to ask you, is it about training people for new classes of jobs entirely, or is it more about upskilling and learning how to use AI in their current jobs?
I think it's both. I think we've got a bunch of challenges, and it's interesting. I talk to a lot of people in the space. And one of the first questions I ask is, okay, so what do we do about our workforce, right? Like, how are you thinking about this? And I often get a blank stare, right? I often get this is a real challenge. We don't know yet.
Yeah.
I don't love that, right?
Me neither.
So what I hear a lot of, which is good, is we've got to focus on training, both training people who are in jobs to maximize the use of AI so that they're better at their job, understanding how to use these tools. That's where Lawler and I have put out legislation that's focused on giving tax credits to businesses that are teaching or training on how to use these tools smarter for people who have jobs and in their jobs right now. Then you have a whole training side of this, which is preparing people, STEM training and other AI training, which is making sure that more people are able to have tools for the future so that they're ready for whatever's coming at you. It used to be that those were programming jobs, and those jobs, we don't need those jobs in the same way that we did just a few years ago, right? Because AI is doing that work itself. So these things will. So part of this is like you're training people, but it's revving so fast. What you're learning now may be different, but if you know how to use the tools, that to me is key. We got to train more. We're losing compared to other countries in terms of training engineers and doctorates and PhDs. We obviously need a lot of the blue collar stuff like electricians and other labor that way, which I think is really important. And there's a renaissance for those jobs. But also the PhD side. We need to keep those jobs here. We need to train more Americans in getting those jobs. And we've got to rethink our whole way we teach in K-12 and in college. I think there's going to be a lot more badging. I think there's going to be there should be a huge change in how we think about education in this country. And we're going to be able to teach people in new ways and exciting ways. Like my kid loves baseball, loves sports. Like, every question can be sports related and get him more excited about it. Those are great things. But also, do we need, if you're going to be a lawyer, my daughter wants to be a lawyer, and I'm a lawyer, and my dad just had one ask, like, don't become a lawyer. But the question is, what are those lawyer jobs going to exist? Or are they going to be different kind of lawyer jobs? And so those are the kind of things I think we are grappling with, and we just don't know what's on the horizon, right? There'll always be amazing reporters, right? But the question is, like, how will those jobs are going to change, right? All of this is going to change, and the question is, are we ready for it, and are we moving fast enough to be prepared? The good news is that Congress moves really fast, so you don't have to worry about that.
As everyone knows, they're going to take care of it. It's going to be great.
Easy.
Yes.
Privacy should be done any decade now.
Any decade now. Well, on that hopeful note, we are out of time, but thank you so much, Congressman John Hope.
Appreciate it. Great to see you. Thanks. Good to see you.
Please welcome to the stage Axios Chief Economic Correspondent, Neil Irwin.
I'm back. Our next speaker is a leading voice on expanding economic opportunity and financial access. She's a member of the House Financial Services Committee. Please welcome to the stage California Congresswoman Young Kim.
Neil, thanks for having me.
Thank you.
Thank you.
Congresswoman Kim, you're a member of the Financial Services Committee, as I said, co-chair of the Financial Literacy and Wealth Creation Caucus. Great to have you here to talk about this intersection of financial literacy and policy. Let's start at the high level and then kind of zoom into some specific legislation that you've proposed to address some of these issues. And to tease things a little bit, you are introducing a bill today that we'll talk about in just a few minutes. So look, financial literacy has always been important. What makes this moment in that discussion unique? How is the conversation we're having today different from what it might have been 10 or 20 years ago?
Well, first of all, thank you for having me. I want to thank FICO. I believe they are the ones presenting this, and Axios. Thank you so much for having me to talk about this very important issue for me personally. I serve as the co-chair of the Financial Literacy and Wealth Creation Caucus. And one of our goals, this is a bipartisan caucus, and I'm very happy to serve with Joyce Beatty from Ohio. And we try to engage more members of Congress about the need to talk about legislation that will help all Americans to be better informed about financial literacy, that will eventually help them create wealth creation. What is more different this time around is that, when I remember after graduating from college and joined the workforce as a financial analyst, I worked at a corporate bank holding company, but through which I was able to volunteer my time educating, going to high schools, talking to high school students about the financial education. At the time, that was like 30, 40 years ago, we're talking about teaching them about how to open a checking account, how to open a savings account. It is different today. Who does? I mean, nobody writes checks anymore, right? So the time is different. We are talking about utilizing the new AI technology, new emerging technologies. So the conversation that we are having today is financial inclusion. It's about making sure that we use the emerging technologies today to engage more Americans, especially the younger generation, to be interested in learning about what are the financial investment tools that are available. Financial inclusion, to me, is ensuring every American has a fair chance, fair shot at American dream, and financial literacy is how we make that happen. And today, the promise of America is why my family came to America to live that American dream, and we're doing it. But today, the new technologies like AI or the digital assets, it's giving Americans more access and faster way to find those ways and then get them started early. This is why I'm so excited, and that's why it is so different when we talk about financial literacy, education, today than when it was 30, 40 years ago. And I think AI tools are what is being used to upscale and scale that opportunity like never before. So I'm really excited. Today's conversation is really all about how do we use the tools that's available, like AI tools, and break down the barriers that put so many Americans on the sidelines because they were afraid of using these AI emerging
let's
technologies.
zero in what specifically we're talking about here. I think of myself as a pretty financially literate person. I'm an economics writer, and yet I find it really useful to have LLMs that I can ask questions of day or night about financial questions for managing my own things. What are the real opportunities that can be mass availability for financial advice through AI?
Through AI? Well, first of all, AI is what the new emerging technologies are used by the younger generation, right? We go where they are. We meet them where they are, and we talk the language that they are interested in. But we talk about AI using as an opportunity. It provides a lot more opportunities and provide more access to finding out the investment tools, access to more capitals. But AI, like any other tools, it could be a double-edged sword, right? On one end, it provides access and opportunity, but on the other end, it could be weaponized by bad actors to target Americans with more sophisticated stamps. We've seen that firsthand with Financial Services Committee that I serve on, through the numerous committee hearings that we've had on fraud and scams. So, we have my colleague, Representative Dan Muser, he introduced Scam Act, and I was happy to support that because it cracks down on predatory online advertisements that lure Americans into financial traps. So the reality is the best defense against bad AI is better AI. Isn't that right? That's why we need the cutting-edge private-public partnerships and innovation that our government can keep up with rapidly evolving threats.
That's what I was going to ask. Is this fundamentally dealing with scams and that sort of thing, fundamentally a regulatory challenge, a law enforcement challenge, a private sector challenge? Who has primary responsibility to try and keep people from getting scammed by these bots?
I mean, if you are not familiar with how these tools will look, while it provides you some opportunities, like if you use AI checkbox, for example, and you want to invest your hard-earned dollars in some place, you can easily go to AI checkbox and say, hey, I got $1,000 here. How can I better use this? In what areas can I, invest my money so I can grow it. However, at the same time, if you're not careful, you can be scammed. So understanding that Scam Act that I just talked about, it provides a system that can detect fraud in real times, and it also stops scam before they reach the consumers and protect Americans at the point of attack. And that's what this legislation is trying to do.
So let's, as I said, turn to specific legislation. You mentioned the Scam Act.
Yeah.
Today you are introducing legislation that deals with the U.S. government's payment rails, and
Yes.
Tell me about what you're proposing.
The payment rail is that's what this is. It pairs innovation with strong consumer protections that allows qualified payment providers to directly access federal payment rails, FedNow, ACH, and those things. It provides federal oversight, and it provides clear regulatory standards. That means what we're trying to do through this PACE Act is provide faster payments. By doing it, we're lowering the cost, and we will stop more delays. Because right now, if we don't use a fast payment system, it could take a long time. It would add cost, and small businesses across America, they just cannot afford to pay even more than what they are already paying over the cost. So let me give you an example why this was important. Americans right now, if you are trying to send or receive money, those transactions often pass through so many different intermediaries. It adds time, it delays the payment from one to the other, and then it adds cost, and it is more inefficient along the way. So my PACE Act that was introduced today, it modernized that system by creating a pathway to regulated, qualified providers to connect directly to payment rails that I just talked about. This means we're going to build a faster, more efficient, more secure payment system that works better for everyday Americans.
And gets away from a world where regulated banks are the only entities that have access to those payments.
Yes.
The idea is to
We're talking about fintechs now.
Right.
Fintechs are already doing it. We want the fintechs to have the ability to get access to those Fed systems and payment rails.
So tell me about the Financial Inclusion and Banking Act, what you see it doing for the unbanked, for people without access to the mainstream financial system.
I'm really proud to talk about that because this is part of what I came to Congress for, work in a bipartisan way to find bipartisan solutions that makes a lot of sense, right? Common sense these days seem to be thrown out of the halls of Congress. I know my colleague, Gottheimer, just talked about his frustration, how it seems like it's become more polarized, but you know what? I want you to know, Congressman Gottheimer, myself, and many of us, he talked about Problem Solvers Caucus. We are one of the only caucus, or the only caucus on Congress that have bipartisan support. Equal number of Republicans and Democrats coming together to find ways, such as I'm working closely with my Democratic colleague, Janelle Bynum. We have introduced the Credit Access and Inclusion Act. This is a bill that will leverage payment cash flows and alternative data sources to boost credit scores. We need to use alternative methods, like rewarding people with the good behaviors of paying payment systems on time. Like if you are paying rents on time, if you are paying credit cards on time, if you are paying utility bills on time, why shouldn't they be rewarded for the good behaviors? Right now, our system is rewarding the consumers for taking out more debt to pay other debts. I mean, we are encouraging them to do more of those instead of paying bills on time without delays. So my Credit Access and Inclusion Act is rewarding those individuals with good payment histories, and then also allowing credit reporting companies to have, to allow and report those good payment history to the credit bureaus. So lenders will have more access to review individuals' the credit histories, and that's what that is. So it allows them to better assess the financial health of individuals' credit histories and helping them build their credits even better. And then the bottom line is we need to reward good behaviors. That's the bottom line of that. And then also, we talked about bipartisan work, right? This is why financial literacy is really, really important, because by doing so, we are building a durable, long-term, sustainable pathways for individuals to build their own wealth creation.
One more specific piece of legislation, the SEEDS Act
Yes.
deals with the Trump accounts. What are you proposing there?
So something like SEEDS account is one trying to codify Trump account. So when you have, individuals are born between now until December 2028, the federal government through Treasury, they will send $1,000 to your child's Trump account. Now that will build a lot of asset, because we're using the magic word of compound interest, right? When the child becomes 18 years old, they have an access to those funds. So we encourage students to be better incentivized to learn about how can I maximize those funds when I turn 18 and be able to invest those funds directly. So if something like this Trump account is working really well, why not make it into a permanent program?
So the One Big Beautiful Bill Act passed last year included the
Include
sunset.
that.
Right.
Exactly. It sunsets it in December 2028. So my legislation will actually codify it and make it permanent.
Got it. Last kind of fun thing. Tell me about any ways that you use some of these new tools, AI and the related mix of things to manage your own finances, to understand your own financial life.
Like I mentioned earlier, I go to ChatGPT very quickly, and I just give a very quick prompt, like, okay, I got $3,000 in a tax refund thanks to One Big Beautiful Bill. I take advantage of those, I ask the same thing. If you guys, anyone who's watching, is taking advantage of no tax on tax, no tax on overtime, seniors, you are taking advantage of no tax on $6,000 or $12,000 if you are a couple. You file tax returns and you'll probably get some tax refunds. Don't waste it, invest it in SEEDS account, and you can go to ChatGPT and say, what can I do with this money that I just got thanks to One Big Beautiful Bill? And it will tell you how to invest. And that's something that I use
Everybody gets
right
their own
away.
advisor, even if you don't have
It's a
money.
free advisor, so go and use ChatGPT or any other AI tools that's available.
Thank you. Congresswoman Young Kim.
Yeah.
Thank you.
Thank you very much for having me.
Put your hands together for senior economics reporter Courtney Brown.
All right, good morning. All right, we're gonna close out the program today with John Hope Bryant, who I feel like needs no introduction. He's a man of the town, but he's long been at the forefront of financial literacy and economic empowerment. Please welcome John Hope Bryant, founder, chairman, and CEO of Operation Hope.
More. Good morning. By the way, that wasn't for me. That was for what's necessary for this moment. The Bible suggests be hot or be cold. If you're lukewarm, I'll spat you out. Translation, even God does not like mediocrity. You can't get half pregnant.
John Hope Bryant with a word this morning. Do not let the youthful disposition fool you. You've been doing this for a few decades now. 30 years?
I founded Operation Hope 33 years ago.
Yep.
I've been an entrepreneur for 40 years. I was homeless when I was 18. That's 40 years ago.
So over that time, how do you measure progress on financial literacy? Like, what is the indicator that tells you financial literacy in America is getting better or worse?
Oh, it's getting worse.
How do you know it's getting worse?
Because this is the anxiety generation. It used to be, it used to be that it was the poor and the underserved, and I had to fight for share of attention. By the way, never let a crisis go to waste. You cannot have a rainbow without a storm first. So this does not have to be a net negative. This can be a positive, but we're getting ahead of myself. Let me answer your question. This used to be a poor person's issue. Now it's a middle class issue. This economy is 70% consumer spending, $30 trillion. I detail this in Capitalism for All, which I just wrote, and it's 200 pages of math. But 70% of those, and this is an old stat, are living from paycheck to paycheck. Would surprise people. Here's the surprising part. If you're making $100,000 a year, half of those are living from paycheck to paycheck. See that? Here's the one for you. You're making $250,000 a year. A third of those, see there, are looking from paycheck to paycheck. It's like, yep, it's not a black or white issue or a brown issue, it's a green issue, right? And folks got too much a month at the end of their money. Can I get an amen? See, it's church. If you're living in New York, you make $100,000, it feels like $37,000. So and some folks got this is migrated to everybody. What are people doing now? They're living on credit cards. That's how they're meeting this is not like luxury. They're meeting their basic obligations with increased consumer debt. They're taking the money they used to spend to go to buy a house and they're buying groceries with it or whatever.
But how do you know that's financial literacy not getting better versus the economic conditions right now are just tough? Inflation is sticky. We're in this frozen job market, no hire, no fire. I mean, how do you think about those two things? Can a society be financially literate but also struggling because of the economic conditions?
Well, life is struggle, so you're going to always struggle, but are you going to struggle with anxiety and like depression and like I give up? I think people are increasingly overwhelmed. Or do you say, oh, this is an opportunity? Because that's really all entrepreneurship is solving a problem. And we don't have enough people who want to be small business owners and entrepreneurs. We don't have people get up and say, let me solve this problem. So the first Reconstruction was access. Basic access. Second Reconstruction after slavery. Second Reconstruction, that was freedom. Second Reconstruction, access, which also women benefited from, by the way. White women, because in 1972, a woman couldn't get a bank account. In America, a woman couldn't get a loan unless her husband co-signed it. Not 1872, 1972. And then we thought we won. Everybody thought, oh, we won. Civil rights movement, access, Second Reconstruction. Access is not enough. No different than technology, access is not enough. You need to turn that into opportunity. You need to turn that into ownership. You need to turn that in. So this third Reconstruction that we're in right now, in my opinion, 2025 to 2035, is about moving folks from the streets to the suites. About moving folks from access to ownership. There is what we need right now is a massive vision, a Marshall Plan for us, right? Don't cancel the Department of Education, give it a renewal. Upskill everybody in AI. I mean, what are we doing? I mean, you need a solution that's bigger than the problem that you face. So there's never been K through 12 financial literacy education. I had home economics class when I was growing up. Anybody remember that? Gone, right? Gone. There was an infrastructure, even if it was modest, that gave me the tools to succeed. I don't see that anymore. Why isn't there a tax break for internships? Why isn't there a tax break for apprenticeships? Why isn't there tax incentives to encourage businesses to invest in small businesses and local communities with venture capital? This is not hard stuff. Why isn't there a tax break to sponsor a school in your neighborhood to teach them financial literacy and AI literacy? Why isn't there a tax break to encourage, don't forget morality, a tax break to encourage a mentorship at scale so people at the bottom learn to access the suite to go to the top because it's a learned art. Relationship capital. If you hang around 9 broke people, you'll be the 10th. So you've got to, I'm giving you guys good stuff. So you've got to, being smart's not enough. Why does somebody go to Harvard? Because Harvard's gonna make you 3 times smarter than a state university? We know the answer. No. And I'm cool with Harvard. I got a certificate from Harvard. But the point is, it's relationship capital because a class of 2053 or 2026 is gonna hook each other up for 40 years. That's why you go to a country club. That's why you're a member of a tennis club or a fraternity or a sorority or any club. It's why you do anything. It's relationship capital.
We can
It's
get
not
back
just
to the
being smart.
clubs.
So there is no relationship capital called the American dream.
Yeah.
That's hooking everybody up at scale, right? That's the new movement. Yes, what were you saying?
We can get back to club memberships in a second, because I have questions.
You have low
about that.
self-esteem, right? A while to warm up.
What the administration, you just throw out a bunch of policy ideas. What the administration has really focused on, the Trump administration, is Trump accounts. And there is a version of this that exists in Atlanta, Hope accounts, right?
Hope Child Savings
Yeah,
accounts. Every
okay.
kid in kindergarten has a bank account, yep.
I mean, how
Good
big
research.
and I shortened it to Hope accounts, but it's much longer than that, so people can look it up. That is tied with a financial literacy agenda, if I'm not mistaken. So 2 things. How big a deal are the Trump accounts? And what do you make of this idea that the administration has put forth that Trump accounts kind of absorbs like their financial literacy agenda?
Nothing absorbs anything. That's a presumption. So it's a good idea. I think it needs to be politically neutral. I think the best way for the administration to get credit for it is not to try to take credit for it. I think that it will make people feel comfortable if it has no edge attached to it and it's just something for everybody. You have to be intentional about financial literacy and don't assume anything because assumption is the mother of all screw up. But look, I'm not. I helped early on Brad, the guy who really inspired this, Gerstner, and Michael Milken, who I think is a genius. He's actually the forward of one of my books. Just talked to him yesterday. It's a kernel of a great idea. I gave them some early advice. Not Michael, Brad. Brad was so urgent in getting this done. I think he sort of went right to the end, and the middle work I thought was really important. Make sure it's bipartisan, hopefully nonpartisan. Make sure everybody buys into it from streets to the suites. Make sure you have a network of community organizations across the country who can take this down to the ground. Make sure mayors, and 90% of GDP comes from cities. People don't know that, 90%. Make sure the cities are bought in. Make sure that the financial literacy, this should have been a natural gateway for financial literacy for all legislation. This should have been like just plug and play. Have Congress and the Senate. By the way, at a time where nobody can agree with anything, wouldn't it be beautiful to have financial literacy for all legislation where the majority of members of Congress and the Senate go, yeah, you know what, I hate to admit it, but I agree. We should all do this, huh? Did I just agree? and you wrap that into kids' accounts. I'm sorry, into
Trump accounts.
These other accounts. And then I think it's magic, right? But as a limited instrument or a narrow instrument or a political instrument, I think it's going to win I think you sort of win the battle of a press release and you lose the war of systemic change. But and I say this constructively. I say this because I want the administration, who I think means well. And there's a lot of policies actually I could get with that they have. It's the how, not the what. And if they just change the how, the what would be much more effective. It's very hard when the poorest person in your administration is a centimillionaire. Okay, I don't know if this is going over people's heads, but you can be the nicest person on the planet. But if you're a billionaire, everybody just needs to get a coach ticket on Delta. Like for a week, everybody should have to go get on Delta or better, go on Spirit Airline actually. Go on for a week and go through an airport terminal. Like sit in a grocery line. Like nobody knows what a cutoff notice is. Anybody knows what a red notice is, right? Okay. Nobody in this administration. How could you? Before you went into the administration, you had private cars. By the way, we should all want this. You had home staff. Somebody's doing your grocery shopping for you. I'm not hating on it. You had private transportation. It's just hard to relate to the average person. It's hard. So you need. We got to help them help us, help them help us. And look, there's one president at a time. This is my president. I want him to be successful. But they have got to do a better job of bridging out. And I have met with Secretary Bessent, who I think is a good guy, and I've met with certain folks. And I think there's the baseline of a bridge here. But America's going to have to do the pushing.
Are you still working with Treasury Secretary Bessent on financial literacy efforts? Because I know there was, a situation last year. Laura Loomer attacked Bessent for meeting with you. What's happened since then?
Who?
More familiar name, Elon Musk amplified that attack. I mean,
It's just noise. It's just noise. I just ignore the noise.
but
Look,
something really admirable about you, John, and I think a lot of people appreciate and know this about you, is that you've worked with every single administration, right?
Yeah.
So are you still working with this one on
My
financial
phone
literacy
works.
efforts?
My phone works. I'll answer the phone every time somebody rational, reasonable calls me. I don't play games. I'm not partisan. I don't win battles and lose wars. You're not going to use me as a piñata for your Twitter war. Look, I got 1 billion video views in the last 2 years talking straight to people. I go viral every week. I don't need somebody. I don't need somebody to define how I'm going to communicate to people I care about. If you want to have a rational conversation, I'm down with that. But if I can see a game coming, and so some of this had nothing to do with Bessent or me. It was a power situation, and that got sorted out. I think Secretary Bessent at base is a good man. I don't want to put him in a situation where we're less effective together than more. Every relationship should be 2 + 2 should equal 6, 8, or 10, or what are you doing? So I actually not called him. Intentionally have not called him because the timing's not right. I can feel it, right? And so I'm going to call him when I think when we go together, we can do like a Abraham Lincoln, Frederick Douglass move, right? But I don't want to. I mean, Malcolm X avoided Dr. King. He loved Dr. King. He did. He was a great admirer, but he avoided him because he knew that he would do nothing but hurt him if he was seen with him in public. He told Andrew Young that. I know because Andrew Young's my mentor. He's got off the phone with him. And so I would not be helpful to Bessent in the short term right now. But I think within months, there's an opportunity for all this sort of to come back together when the country just is exhausted. Aren't you like exhausted adjacent?
Exhausted adjacent.
Yeah, I just think that but people aren't exhausted yet. They're not there yet.
Right.
And I think that when we get there, then there'll be opportunities. And my phone is always on. I've been honored by 5 presidents. I've served 3 from both parties. Wouldn't everybody just love President George W. Bush, right? I mean, like people, my black community were like, he's the devil. People are like, what's his number now? He actually did more for Africa than any president, by the way, George W. Bush. I've worked with 12 secretaries of the Treasury, 12, and I've known 9 U.S. presidents. I respect some more and like more or less and all that stuff, but I'm not mesmerized by things that most people are mesmerized by. I just want to see progress.
Last question for you, because we're out of time. You met with, I'm a Fed reporter. That's what I do on a day-to-day basis, cover
You're
the Fed.
smart.
Economics reporter. But you met with Chair Powell, Fed Chair Powell.
Great guy.
Last week, I
Isn't it
believe.
great we're out of time?
Well, I have a little bit of a buffer. What did you all talk about, and what is the role that the Fed plays in your financial literacy agenda?
Luckily, I can't repeat most of what we talked about, but it was a fabulous conversation. We met for an hour. I'm so impressed with him, and we should be so proud to have an adult at the Federal Reserve. He's not bowed. He's not moved. He is neutral, and he is not political, and he's still hopeful, and he has hope, and he believes a lot of what we've been talking about. Financial literacy as an absolute balm for the nation and grease for the gears, and more needs to be done. All the stuff about anxiety and consumer economy I talked about the K-shaped economy, and the fact that it's not sustainable. I talked about the fact there's too much heat at the top of the economy with the stock market being unnaturally warm right now, and that's causing too much consumer spending credibility or too much consumer spending power at the top. And if the top ever gets knocked off with the stock market adjustment, that's going to hurt everybody else. We need the bottom and in the middle to be strengthened because America's really about a strong middle class, and we sort of forgotten that lesson. So it was a lot of amens in the meeting. He's a little.
Powell was
right
saying
now.
amen.
No, I was saying.
Oh, okay, just checking.
Yeah, I think he left the meeting. The meeting was scheduled for a half an hour. It lasted for 48 minutes, and if he wasn't being pulled, we'd have sat there and talked for an hour and a half. And the Fed president of Kansas City is on my board, Jeff Schmidt. So lots of common ground. And yes, we're out of town.
We're out of time. John, thank you so much for joining Axios, and thank you all for spending part of your morning with us. If you want to know more about what I do and my co-author, Axios is Neil Irwin, you can sign up for our newsletter, Axios Macro, which we're going to jet off and write right now. Sign up at axios.com/newsletters. And if you want more of this conversation, check out our YouTube channel. You can rewatch it.
And get Capitalism for All, my new book.
John's new book. Thank you, everyone.